All right. Good morning, everyone. How's everyone doing? Give me a little shout out here. First of all, if someone can let me know, as usual, if you can see me, hear me, and most importantly, see the outline and the charts for today. Let me know who you are, where you're from, and hopefully everyone is having a great start to their weekends. Right after this thing here, I'm going to head out to Torrey Pines. Those of you who are golfers probably know about Torrey Pines. There's a nice hill out there. I'm going to hike that, get down the beach. Let's see here. Who's in here? Brian, what's going on? Martin from London. My wife was born in London. Let's see here. Great. You guys can see and hear okay. All right. Stefan, what's going on? Robert, we'll do a little shout out here and then get started. Eric, what is going on? All right, Abhishek, what's going on? We got to get together soon. And Abhishek is from Canada. Another Canadian here from Calgary. We've got Ed. Martin wants me to talk about SOX L. We should always be watching semiconductors, so we'll definitely talk about that. Give me a reminder there. Stefan is from Munich. We've got Robert from South Florida. Neil from Scotland. Wow, it looks like we've got more international than domestic here. James from Black's Beach. You know San Diego well. For those of you who don't know, that's a nude beach, which is literally about 5 minutes from me. Toronto, Stevens from Toronto. We got a big Canadian turnout today. Irina from Massachusetts. James from Ohio. We've got Grace from San Diego, probably very close to me since I'm in San Diego here. Gaj from Austin. Anand from Austin. We've got Daniel from Chicago. All right, and let's see. I always start these with a book recommendation. I'm going to recommend two. Those of you guys have seen a few of these. I've already recommended Unknown Market Wizards because I have a friend who's featured in this book. I have so many notes I've taken in here. Now, this is not going to give you any good trading strategy, but there's a lot of just kind of mental game and knowledge type stuff. But I could randomly go through one of my, wherever I've underlined here. There's a lot of good stuff in this book. Let me randomly go through something I underlined. Let me see here. There's someone here talking about Fed events, and I was really interested here because they do almost exactly what I do around Fed events. They talked about the 4 things to look at: the economy, inflation, future rate paths, and any synchronous factors, which is basically surprises. So that's a good book. If you guys are science fiction fans, The 3-Body Problem, this has been on my list for a long time. What's really interesting about this is it gets really philosophical about perceptions. Basically, science is under attack, and there's 2 different factions and what causes their perceptions on things. It's really interesting because you could relate that to trading right now and say you have the old guard and the new guard. The old guard, the Buffetts and those guys looking for value. You have the new guard who are talking about cryptos and these meme stocks, and you can see how their perceptions are really different on these things. And I would say for us, we want to be outside of that and try to get rid of our perceptions and our preconceived notions and just trade what's in front of us. So that's a really good book that you could relate to trading, even though it's science fiction. All right, guys. Great turnout this morning. So what we're going to do today is do a market analysis. We're going to, as usual, we do every week here, or every other week when we do Coffee with Paul. We're going to go over a few trades. We're going to go over 5 areas to watch, especially heading into summer trading now. You guys have probably already noticed the character of the market has changed a little, which usually happens as summer begins, May, June, July. We talked about that 55, 35, 70 split at the last Coffee and Stocks. 5 areas to watch, and then we're going to talk about the Summer Swing Trading Bootcamp, which is actually starting tomorrow, and we're going to go over a bunch of good summer strategies. We're going to go over historical summers, numbers, and all that good stuff. So we'll talk about that, and that is starting tomorrow. All right, why don't we go ahead and begin? Let's start talking about the market. I'd be interesting to know from you guys whether you would consider yourself bullish, bearish, or neutral right now before we get into the analysis. And you guys can just put your thought in the chat right here: bullish, bearish, or market neutral. I've already got Ed here saying neutral. We've got Neil here saying neutral. Irina feels bullish. James is bullish. Brian is neutral. Eric is everything, which I think it makes you neutral, man. If you're everything, you're neutral. So we've got bearish, bullish. We've got one bearish. We've got a little bit of a sentiment indicator right now. So everyone's either neutral or bullish. One person is bearish. That's interesting because the market has been very shaky. And maybe you would think there would be a little bit of fear in the market, but it's interesting just from you guys, not really. Gaijin is bullish. Nyanj is bullish as well. All right. Let's go ahead and take a look here. I'll tell you guys right now, I am market neutral, which means caution, but it doesn't mean you can't trade. So just because you say you're neutral, it doesn't mean you're not going to be putting on trades. But I don't really have a big bias in either direction right now. And Martin is short-term bearish. All right. So let's go ahead and take a look at the market. And when we say the market, we're basically talking about SPY and then the Qs and IWM. So let's look at what is happening with SPY. And if we were, it looks like I'm getting cut off here on the screen, but that's okay. We just need the charts. You don't need to see me. If we look at the market here, if we define the trend, it's definitely uptrend. And basically since that March meltdown, nothing's really changed. We're still in the uptrend. What's interesting here is I always like to look at the, we'll call it the steepness of the trend. Notice how steep it was here. And now how it gets more and more kind of flattened out. Something to think about, that obviously the trend has slowed down. And we are getting more and more of these big dips seemingly like every month now, where you kind of get a big scary dip, where we had scary dips as well, but they were a little more spread out. So the character of the trend has definitely changed from last year. It's slowing down for sure. And you know, if you were to pull up RSI, or we've got stochastics down here, stochastics would kind of show that too, that the trend has slowed down some. But we can eyeball it and see it. And I like to eyeball these things rather than use indicators. So that's one thing to think about. Two, the SPY is back on uptrend. So, you know, it was a little bit of a scary test last week, especially after the inflation numbers came in on Wednesday. Obviously, that shook the market a little bit, and we got a pretty quick, deep pullback. You can see here, SPY tested the 50-day moving average, but technically here, back on trend, back above the 9 EMA. And then if we want to dig a little deeper, this is the surface level stuff. Let's take, actually, we'll do surface level stuff right now and then get into market breadth in a second here. So let's surface level the Qs here. Qs, first of all, comparison to SPY, showing relative weakness. So what we can take away from that right away is, even though the Qs aren't completely 100% tech, if you pull up the list here, but it's heavy tech, heavy in tech. You know, I think Ralph Lauren is in here. You know, Ross Stores is in here. So it's not 100% tech, but it is very weighted. I would say for every 7, you know, something tech related, there's probably 3 non-techs, and even maybe more than that. So obviously very tech heavy. And because the Qs are lagging, that's going to tell us right away that tech is showing relative weakness. So that's the first notable thing here. But there is something promising here just on the trend perspective, that we are seeing here an attempt to remount the 50-day moving average. And if it does that and starts to push off the 50-day moving average, we have another higher low. And every one of these dips here has been a higher low. You know, we start here. This one was higher than this one. This one was higher than this one. This one was higher than this one. And now this one would be higher than this one. So we have a potential higher low here. So, you know, from a trend perspective, if we get continuation here, then that would be bullish, but I wouldn't say bullish yet. We have to see that this holds. This could be a dead cat bounce, right? And we are sitting right at a resistance level, both in terms of moving average resistance and price action resistance right in here. So we really need to break through this level. That's why I would say a market neutral right now. And once this happens, if this happens, I would become bullish. And then if this were to start failing here, I would become bearish, and this would look like a dead cat bounce. And we could get a split market, which often happens in the summertime. So usually these things are moving, one area will show relative strength, maybe a little relative weakness, but they are generally moving in line with each other. Sometimes we get these big splits. Could be that, maybe the Qs start to fail here, but SPY continues to show strength here. And we've seen that happen a few times, and that could happen again. We'll see. We're not predicting that, but you should always have these, you should have the possibilities out there and be ready to pounce on whichever possibility happens, plan B, plan C. So here with Qs, plan A is we get the remount here, we get continuation, and then we start to get aggressively bullish, or we fail here, and then we start initiating shorts. So plan A, plan B, but I wouldn't go in with a prediction right now. So that's why we say market, or I would say for me, myself, market neutral. And then IWM, a little cause concern here that it has been lagging overall. You see, when we look at SPY, when we look at SPY here, we see the uptrend. Even when it's weak, it still is overall uptrend. And same with the Qs. We talked about the potential higher low here, but IWM, this is just one big range. There's no real, basically since February, we'd say almost this whole year, it's just been a range. There is no real trend. And we want IWM to be strong. If IWM is good, that's telling us market breadth is good, that the entire market is good, because that's more, small caps and mid caps as well, and not weighted. Even though, Apple and them are in here, they are not weighted heavily as they are in SPY. And speaking of weighting, let's get into market breadth now. You guys who have been to more than one of these know very well that we like to look at the equal weighted ETFs. And for those of you who don't know what that is, SPY is not equally weighted. So we have 500 stocks in here. We have Apple, Netflix, Tesla, STX, WDC, all these stocks, CCL, right? If you took the 500 stocks, supposed to be the biggest and best 500 in the market, they should each be worth 0.2%, right? To make 100%, 500 times 0.2 would be 100%. It's not weighted like that. Apple's worth about 3%. Even Tesla, which just got into the S&P 500 at the end of the last year, is already worth a big portion of SPY. So, if you were to take the top 10 holdings, the number changes, and I'm not sure if I'm exactly accurate, but it's close to between 25 and 30% of SPY, just the top 10 holdings. So you can see how little then value some of the stocks have within SPY. So when you see SPY, you're not getting an accurate picture of actual 500 stocks equally weighted. But there is an ETF called RSP, which does that. So in RSP, every one of these stocks is worth exactly the same. Apple is worth exactly the same as GPS, RCL, NL, NCLH, and so on. So if RSP is lagging SPY, that's telling us that probably the bigger weights are pushing SPY and the rest of the stocks are lagging some, which is not good in a healthy market. And it's telling you the market is narrowing. When RSP is keeping up with SPY or leading SPY, that's a good, healthy sign. It doesn't have to be leading. If it's with SPY, that's fine. Now, what do we see right here? This is interesting. And this is why we didn't get really scared during the pullback. One of the reasons why. Notice that SPY tested the 50-day moving average. Dropped right to it. These percentage drops were pretty big, and it went right to the 50-day moving average. Notice RSP, just by eyeballing it, you can see the percentage losses were not as much and didn't even test the 50-day moving average. And now it's back up over the 9, just like SPY is. So this is healthy. This is confirming what we are seeing in SPY. So those of you who are bullish, this confirms what you are seeing. Now let's go to the Qs. here. We see where the Qs are, and then let's look at QQ. And you guys might want to write these down if you don't already know about this. QQ, EW is the equal weighted for the Qs. And we can see here also right in line with the Qs, not lagging, probably right in line. It looks very similar here. We could go through and calculate every one of these percentage drops or how big the percentage drop was from here to here versus the Qs, but we don't really need to do that. Just eyeballing it, it looks a little bit stronger. The drop was a little less than the Qs, and now sitting right about where the Qs are, just right around the 50-day moving average. So at the least, not lagging the Qs. So again, maybe neutral to slightly bullish on this. And then my mind's blanking. If someone has it, my mind's blanking about the IWM one, which is not quite as important because IWM is already less weighted towards the heavy stuff. So our first market breadth indicator is actually decent, right? If you're neutral to bullish, these are good signals for you. If you're bearish, you'd probably be thinking, I'd like these to be a little weaker, but they're not the be all end all. There's other things to be looking at as well. See if you guys have any questions here. Martin was saying short-term bearish. Fed selling up QE, investing for the next trend. Yeah, the concern with the Fed is their take on inflation, right? And the big thing with Fed is what are they doing with printing money and what are they doing with rates? And the fear is that because of inflation, they're going to want to stem that. And to do that, they would raise interest rates. And that's kind of what every time they speak, that's what we're looking for right now. Ed mentioned EWSC for IWM. Let's just quickly take a look at that. EWSC, small cap 600. So it's not exactly the same thing, but it is equal weighting of 600 at least. And you can see here, this is actually healthier than IWM is, although IWM is more stocks, so it could be a little different. But this helps, definitely helps. Okay, so that's in terms of market breadth. That is the looking at the sectors, looking at small caps. T2108 and T2101 on TC2000 stocks that are above their 40-day moving averages. Overall, this is a little weak. If the market is near highs, we'd like to see this higher. So that's telling us a lot of stocks have not participated, but we are seeing a little bit of a spike here. So that is a good thing, but we'd want to see a lot of improvement on this. And T2101 is breadth index, and this is actually lagging a little bit as well. Okay, now let's talk about earnings. We talked about this with the last time we met, and that is that earnings we're getting this really interesting split right now, where if you're a numbers guy, if you're a fundamentals guy, and you're looking at earnings, overall, I mean, obviously it differs from stock to stock, but overall earnings have been really good in terms of a lot of stocks beating their expectations. We're seeing revenue increases, a lot of good stuff, right? But, and if we look at the FANG stocks, the big stocks we look at, and the banks reported good earnings, and most of the FANG reported good earnings. Netflix did not. And that's not surprising because with the economy opening up, less people are going to be home watching Netflix, right? Maybe even canceling their subscriptions. So that's not a surprise with Netflix, but the rest of them, Google, Facebook, and specifically Amazon and Apple. Amazon had record revenues and good future prospects. Apple, record revenues, good future prospects. Yet the price reaction, so there's this split. Fantastic earnings, fundamental guys going to love it, but the price action has not been good. And that was a market tell for us, and we got very cautious. And it's paid off because we can see what happened in the market. Let's just look at Apple as an example here. Apple had blowout earnings and after hours, so they reported after hours. After hours, the stock was spiking. I don't remember exactly. I think it was like 5%. But look what happened here with Apple. I have it marked here. This was the earnings day. Look at how volatile it was. It's actually, when it opened, it was opening a plus like 3 or 4%. By the end of the day, it had completely reversed, even though it had record earnings. And look what it has done since. So this was a concern, and this is not just Apple. If it happens to one stock, who cares? But this was happening to a lot of stocks that were having good earnings. Banks like Morgan Stanley had fantastic earnings, and then they dipped. They've done better since, and the financials are actually very strong now, but that initial reaction was poor. Amazon had fantastic earnings, and it's done nothing, absolutely nothing since here. So that was a little bit of a concern when we think about market breadth. So that's something to think about, although you look at that initial reaction, and then I also like to look at what's happened 1 or 2 weeks afterwards, because a lot of time you have this initial overreaction and then things adjust. And that has actually happened in banks, where banks didn't have the strongest reactions to good earnings, but since they have gone up, like if you look at Goldman Sachs afterwards now has done well. So these are some market tells, some market breadth type things you should be looking at. Again, not specific to one stock, but look at what a bunch of stocks have done. And if you're seeing some patterns here, that's something to think about in the market as we head into summer trading. So there's that. There's earnings, and there's still a lot more earnings going on now. We've got a lot of software stocks reporting till the end of the month. One last thing to think about, not necessarily market breadth, but just something to think about, because they could split different industries and sectors. We're always thinking right now about the reopening of the economy and the stocks that are most sensitive to that, both in a negative and positive way. So and we're going to get into that, into areas to watch, but we'll kind of skip to that right now. Reopen stocks, right? So that would be airlines, that would be casinos, anything related to travel or going outside, even Disney. Disney is kind of interesting because Disney lives in both worlds. They have the amusement parks and all that stuff, which is really gets a positive out of the reopening of the economy. Everyone can go to Disneyland now. But they also have the media side, and they have the Disney Plus and all that, which is actually hurt by that because people are staying home less. So Disney's kind of interesting, and they actually had a poor earnings reaction last week. But reopen stocks, again, airlines, casinos, gaming, restaurants, retail, all this stuff sensitive and will do well with the reopening. And then there is the ones that will do poorly, the stuff that basically had been on fire in 2020, software, especially when you look at something like Zoom, which we are actually using right now. But now less people have to use Zoom and can meet together, and so people will be going back to work more. So obviously Zoom's going to get hit. Peloton, we can go to gyms now, right? TDoc, you can go to the doctor instead of having to do it from home. So all of these kind of things are sensitive to this as well. And then the CDC came out on Thursday, I believe it was, and actually came out and said something we already pretty much knew, but that if you're vaccinated, you don't need masks, and inside, outside, whatever, you don't need to be wearing masks unless the place wants you to wear masks. So obviously that gets more people ready to go out, not wear masks, and that is even better for the reopening of the economy. And we saw it with, let's just skip over to reopening stocks. So if we look at a list of reopened stocks we have here that we've basically been watching since the pandemic started, when we were concerned about them, but let's just randomly go through them. CCL, so cruise lines, right? And you can see the big pop after that in cruise lines. Look at department stores, even retail, the fact that you might go to the store now, that could spur more buying. Retail, very strong. Uber will be traveling more. So Uber got a little pop after being very weak. And then, of course, the airlines. Look at Save here, getting a nice pop. UAL, MGM, casinos, restaurants like Ruth Chris here. Look at that big pop there as well. So we definitely, going into the summer months, we need to be watching these areas. So I'm going to skip down here. We talked about the reopened stocks, definitely an area you should be watching. And the CDC move might be the catalyst for the next move. And you see these things already, if we pull up JETS, which is the airlines ETF, you can already see they've made a big run, right? With stuff reopening here. Bottom here, consolidated for a long time, now made another run, another big consolidation. And maybe the CDC thing is the next big push in this area. So going into the summer months, we should be watching reopening stocks very carefully. And again, the stuff that is hurt by this, which maybe are good shorts now and could be topping. If we look at something like Zoom, this does have the look of a topping formation. Crazy move in 2020. Now this looks very much like a topping formation. I would not be surprised if by the end of the year, You know, this thing was at 500, it's in the 300, almost 600, in the 300s now. I wouldn't be surprised if it's back down in the 100 or 200s by the end of the year. So definitely what we should be paying attention to there. Speculative junk stocks. These tend to do very well in summer when a lot of Wall Street has left. The institutions who are mostly doing, you know, the big stocks, they're on vacation. You see a lot of grinding and consolidation during summer. And every summer is different, but that tends to be what happens. And then you see a lot of speculative junk plays because people need stuff to trade. You see these areas really start to move. So we're not making a prediction that they are going to move, but we definitely should be watching. So any fad areas, always like look for junk tech, junk biotech that will start moving and you get quick swing trades out of them, but especially these fad areas. So, and of course, fad areas change from year to year. You know, a few years ago, it was fast casual restaurants. It was, you know, specialty retail stores. Right now, what we consider the fad areas. NFT stocks, definitely. Blockchain and crypto related areas, and electric. So 3 big fad areas right now. So if we look at, let's just look at some of these areas and go through some of these stocks. Electric, obviously, you know, there's Blink, Plug, Beam, XPEV, Solo. A lot of these are Chinese. FCell. These are auto manufacturers, electric parts and components and batteries, and then just pure solar plays as well. So watching this area very closely. It has been beaten down, but we'll see if they make a run into summer. And then blockchain here. Some of the more pure plays would be like Mara, Riot, and then we have kind of indirect plays because they're accepting blockchain like PayPal. And then we have the ETFs like, or not ETF, but platforms like Coin, which just IPO'd. And then we have ETFs like Block, which is a bunch of different blockchain related stocks. And then GBTC, which is the Bitcoin trust. So we should be definitely watching these areas as well. And then NFTs. And you can see a bunch of different NFT stocks that are not really that strong right now, but definitely should be watching. I wouldn't be surprised if sometime during summer we see a big run in these things. So we should definitely be watching Reopen. We definitely should be watching speculative stuff. Of course, we're always watching FANG and big tech. Are they going to move over summer? Maybe. We don't know, but we'll watch and see. They could get range bound and do a whole lot of nothing, which would not surprise me. But maybe they make runs. We should always be watching those. And then energy. Energy is looking very strong right now. Could be ready to break out. If we look at USO here, you can see this thing made a bottom here during the pandemic, kind of consolidated here, and has been forming this kind of cup and handle here and looks ready to break out. If it breaks out over this range, I think oil could make a big run. And then energy as well. And we just got out of our energy trade last week, and we're looking for another one. And this does look like a big cup and handle. If we get a break here, you could always trade the leveraged ETF ERX, or of course, there are hundreds of different energy stocks we can be looking to trade. So energy, big tech, speculative, Reopen, and then VIX. Let's just pull up VIX here. I'm going to use the triple leveraged. So let's look at UVXY. Notice here that every time there has been a dip in the market, there is a spike in VIX. So here, you know, back in January, spike from 9 to 15, almost well, that is a 50% move. And just recently, spiked from 4 to 6. So a pretty big move there. So this is only if we see the market tanking, VIX will be in play. So a lot of other areas we should be watching. And of course, there are specific strategies. I'm going to go over that in the summer class. So we're going to go over Summer Trading Foundation Day 1. That's tomorrow. We're going to go over historical patterns, how to manage risk, some swing trading basics, which I know a lot of you guys know who follow me. Some speculative plays in terms of how we trade IPOs, small cap momentum, and fads and trends. Day 2, we'll get really into the strategies. Day 3, we will get into some specific option strategies that I'll use in both range-bound and volatile markets. And then Day 4, bonus mentorship. We'll do a ton of practical examples and then your questions and stuff. So if you want to sign up for that, I'm going to put the link in the chat here if you want to take a look at that. Let's go get now to some trades. So we'll go over one win, recent win, one recent loss. Let's start with the recent loss. That was Penn, which I still really like. So last week here, we had a piercing pattern. I was trading this as a rubber band setup. Obviously felt like it was going to bounce here and maybe we test the 50-day moving average. It did not do that. It is still actually within this range. And I do think it's going to do that now, especially with some of the positive CDC stuff. But I had my stop right under this candle and we got stopped out for about a 0.8% loss. So right within our risk range. And then the win was 3M. You can see here, one of my favorite setups, which is a stock that overreacts to a gap down. So you can see a gap down here, immediately reversed when it broke the gap down level and filled the gap here right around 200. We got in and we took profits basically right at the top here before it pulled back. I still love this stock. And you can see here, remounted the 9 EMA. Current stocks that we are in, we've been trading very conservatively. We are in Adobe. Much like Penn, I got into Adobe on this piercing pattern here. Now this one did hold barely this candle, so we did not get stopped out. And you can see here it's remounting the 9 EMA and we are back over our entry, which I think was around 483 and it's at 486 right now. And then on Friday, got into Apple. This was pretty mechanical. We said, if it gets up over its 50-day moving average, we're just going to jump in without thinking. And it did that. It tested the 200-day moving average, bounced, and on Friday, got up over the 50-day moving average. If this holds, much like the Qs, this is a higher low. You can see here, higher low here. This would be a higher low here. It would get back on trends. We know the earnings were good on the stock, so the stock is healthy, even though it pulled back here. So that was the play here. Very low risk in terms of if it doesn't work out, so what? You know, it's going to be like a 0.8% loss. But if we win on this, you know, our stop is like, I don't remember the exact number, about 4 points, I believe. But if it starts to run, a lot of room to the upside, I'm going to get good risk reward on this thing. All right, guys. So that's what I wanted to go over with you guys. Thank you for joining me, spending your Saturday morning with me. And remember, that class starts tomorrow if you want to join. I know some of you guys are Swing Report members. If so, I will see you on Monday. I see a few questions here. Let me just see if I can get to these real quick. Eric's talking about adjusting his style somewhat. He's more of a systematic trader, but has been discretionary recently. I can see, a mix of both is good. Eric is liking Airbnb. This one's interesting. Obviously, the reopening of the economy is going to help Airbnb, right? People are going to travel more. And it did post, we'll see if this is a bottom here. I would have loved for it to test the IPO low, which it didn't quite do. So it's kind of in no man's land right here. I do see this as a hammer, and this was, it responded well to the CDC news. Some things responded a little better. I'd feel more comfortable if it rebounds the 9 here, but I could see this being the low. We'll see. Gijin's asking about a link to the class. I did post it here. Let me post it again. And if you have any questions, you can email me. By the way, here is my contacts here. If you want to take a screenshot here, singjd1@aol.com. Yes, I use an old school AOL. To contact me, I get back to everyone. If you have any questions at all, if you had joined these things, you're part of the Bulls family. So definitely, I will get back to you. And then obviously Bulls on Wall Street, my own website, which is more mental game type stuff. And then of course, Twitter and Instagram, Paul J. Singh on Twitter, the real Paul J. Singh on Instagram, because there is an imposter. And I post a lot of videos, market analysis on these things, so you can check those out as well. Nang, yes, once you join the class, you can watch it as many times as you want. Robert, I use the 533 full stochastics. I know a lot of standard software will start it at 14. I think that's a little slow for what we're doing, so I adjusted to 533, and that's the full. And I do not use Thinkorswim. All right, guys. Thank you again. Thank you for joining me this weekend. Everyone have a fantastic rest of the weekend. Those of you who are in the swing class, I will see you tomorrow. Talk to you guys soon. And again, remember, we do these every 2 weeks.